Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Matt Battielli. It means we're going to be talking a bit more about critical minerals, and in this segment, we're going to be focusing on the lithium market. I think we all know just how much the lithium price has dropped, but look, there could be some opportunities in this lithium market. Matt is the editor of the New Energy Investor, published under the Mangrove Investor website, which I will link to in the show notes. Now, Matt, it wasn't long ago that the lithium price was over $80,000. Now we're looking at prices around $10,000. It was historic run in 2021 and even moved a bit higher in 2022. And then the market essentially just collapsed on itself. A lot of talk about DLE technology. There's also a lot of companies continuing to grow and build out resources. But the fact of the matter is, look, when price drops that much, man, it can be real tough for companies. Matt, how are you viewing the lithium market right now?
That's a great question. I've been a professed lithium bear for a while. I just thought the price got overextended. I did not recommend any lithium miners. I mean, my premise way back in the day was that SQM could drill a couple of extra holes and effectively double their lithium production. So I just didn't think that the undersupply that existed for a little while could be maintained. I was wrong about why the supply would balance, though. I thought demand would hold up, but supply would catch up. And actually, what's happened is you actually had a bit of demand fall off as the China's sales has fallen a bit. And then, yeah, you have, I think, an oversupply now of lithium. I was always leery of the hard rock lithium and the companies that needed a higher lithium price. I was just worried about it. And then all of a sudden, Europe started putting tariffs on Chinese EVs, and that impeded demand. And then you had that jump in interest rates in 2022 as the world was struggling with inflation. That really was a disincentive to people buying new cars. And let's face it, lithium is tied to EVs. The bulk of the lithium that's going to be consumed is going to go into electric vehicle batteries. And so if you have a reduction in demand, I think you had a bit of enthusiasm there that came off when the reality hit, and that's what killed the lithium price. But even as a bear, sometimes things can get cheap enough. And I think that at this current price, if you can find companies that are economic, this might be the time to start adding lithium producers to your portfolio.
So let's talk about the types of deposits then. There's the pegmatite or hard rock deposits. Those, I think, are more in production. They've been around for a bit longer. Brine deposits, these in a way are a bit newer, but there's also some complexity about how you even produce from these. There's also sedimentary deposits, but these are less common. When you're looking at these different types of deposits, then you don't like hard rock. So does that mean you like the brine deposits?
Yeah, so the kind of the historic lithium production was a byproduct because nobody knew what to do with lithium. I mean, they put it in some grease, they put it in some paint, but it was a byproduct of potassium, the production, potassium for agriculture, right? And so you needed fertilizer, you pull brines out of these basins. They're basically bowls, right? So they're internally drained, meaning that there's no stream that pulls the water out of them. So all the water that is running off of and leaching out of the mountain ranges around these basins dissolve these salts, these mineral salts. So you get sodium, you get potassium, you get lithium, and then they fill these basins and evaporate. And so you can go in there and actually separate the metals out by weight. And so we were producing lithium from these internally drained basins. And it's a very archaic production, the old school stuff. They'd pump the brine out of the ground, they'd put it in separating ponds, and let the sun evaporate it and then harvest the metal that way. That's how the SQM has got to be one of the world's largest Sociedad de Química Minera. It's listed on the New York Stock Exchange. Back when I wanted exposure to lithium, that was the company that I chose. Very leery of the new pegmatites. A lot of these things a lot of the ones that aren't in production yet, they're going to be mines. You're going to have to move a lot of material. You're going to have a lot of waste. You're going to have all the social issues that go along with mining, and they're going to be price sensitive. And I think when we look at the economics that were used in their studies, most of them were too aggressive. I'd be very curious to see the ones that were done at sub $15,000 a ton lithium, because I think we're at 10 now. It'll be very interesting to see where the price settles. The lithium that really the one of the main reasons that I became a lithium bear in the first place was the announcement by ExxonMobil last year that it was going to the lithium business with a company called Mobil Lithium, and that they were going to actually pull lithium out of oil field brines. And so brine, a lot of these oil fields float on top of huge volumes of salt water. Years ago, I was in Texas at a big oil and gas conference, and I sat at a bar and talked to this guy who was your classic oil man. He's got the down at heel square toe cowboy boots and beat up jeans and kind of a Western shirt and a old threadbare blue blazer. And as we were sitting at the bar, he told me that he was the crowned saltwater king of West Texas, which meant that he hadn't drilled an oil well in a long time, because everything he drilled was salt water. But here's the interesting thing about that is that salt water, it's not just sodium, it's lithium. And Exxon believes that there's a vast swath of rocks that they've used to pull oil out of called the Smackover, which extends all along the southern states of the United States. They think that they can drill and produce lithium. And I guarantee you that the Exxon economists weren't using $80,000 a ton for their lithium price before they put these wheels in motion. Regardless of what you think of ExxonMobil, I had a lot of time when I was working toward my PhD back in 2000 to 2005. They supported a lot of my research. They're a smart, well-run company. And so the idea that they're rolling out a brand new business around lithium tells me that A, they can produce lithium from the brine, and B, that they can do it economically. And so I think that puts a lot of the projects that need higher lithium prices in jeopardy right now.
Yeah, this DLE technology, I think this is the biggest game changer that investors need to be focused on. And as much as ExxonMobil has said they're putting that much money towards DLE technology, I've also heard that, hey, they could also just be out there and acquire a technology if it works rather than having to develop everything themselves. But it really comes down to what DLE technology works, at which concentrations, and how much it costs to produce that lithium. What does that mean for pricing of lithium then, if we are just simply potentially going to pull it from existing production, or at least some of it from existing oil field production?
I mean, here's the thing. If you're an oil company and you already have these leases in place, I imagine that the permitting is just going to be incremental. So it's not going to be the big, expensive delay permitting that you would have to build a hard rock mine. You already have the existing infrastructure in place. It's just pipes and wells. And so wells are way less expensive to drill and plumb than a mine is to build. And so apples to apples, I think that the oil field brines are going to be a much, much less expensive or a much more profitable way to produce this. And it's very interesting because we talk about Exxon because they're kind of, in my mind, the gold standard, but Equinor, Schlumberger, Occidental, BHP, there's a bunch of these guys that are looking at this and trying to figure it out. They have massive oil fields to work with, massive. And so it won't just be one company. And yeah, I mean, if you find a company that can successfully produce oil field brine, I absolutely believe that you should own them, partly because they will be bought and there will be a bidding war for them by these oil companies. And these oil companies have an enormous amount of free cash available for these acquisitions. And the oil industry understands business, I think, in a way that mining development, mining exploration companies don't. There just aren't that many mining companies in the lithium space that have operated profitably for as long as oil companies have. And I'm not casting aspersions on the mining industry, but they're just not the same entity. I mean, you're an oil company, you go out and drill a well. If the fluid that comes out is black, you're in the money business, right? Now suddenly you have a product that you can sell and generate revenue and borrow money against to drill another well. And that's just not the way that mining development works. So I'm kind of excited about that investment potential.
So, Matt, does that mean that from an investment standpoint, you would maybe just avoid these companies that are building up these resources, these brine resources, and focus more on the ones that are developing a DLE technology? Or do these brine resources still carry some potential value, I guess, if they're high enough grade?
Yeah, there's a couple things that I would say. One, the first thing I would say is that, I'm going to go and over the next couple of weeks, I'm going to do a deep dive into this space. So maybe we can come back in a couple of weeks and I'll have a deeper dive. But in commodity markets, when you've achieved that deep discount, when the price collapses and everybody sells the shares of the existing companies out of disgust, sometimes the companies don't matter in that case, right? So when the trend reverses, so if the lithium price catches a bid and say it goes from $10,000 to $20,000 a ton, that sector, all those juniors are going to fly, right? But in terms of valuation, yeah, I have to go case by case and look at economics. I want to own companies that I know that are using the lowest lithium price in their economic models. And so if your cutoff on your economic model is $20,000 a ton and that's your break even, not even gonna waste my time. But I do need to do a deep dive into this space because I do think that we've gotten cheap enough. And so it's time to start looking for exposure to lithium because like I said, I believe that lithium, as EVs go, lithium goes. And China really is the driver of EVs right now. I mean, China's EV sales are equal to 1/3 of all the vehicles sold in the United States. That's a huge amount of cars, huge. And so their economy is tight. There have been massive tariffs placed on their EV exports in Europe and in the United States. So when that begins to loosen up and we start to see people buying these EVs again, or even the plug-in hybrids, right? There has been a shift. Like you saw Ford just wrote off an entire line of electric SUVs because they couldn't get the battery price down to get the actual total price of the vehicle low enough to make them attractive. So they just dumped it. And they're going to write off about $1 billion off of that line. But they're not replacing that with internal combustion engines. They're replacing that line of vehicles with plug-in hybrids, which have a small electric motor alongside a battery. And then that gives them range security because you can still fill the thing up with gas and get to where you need to go. And you can use your gas engine to recharge your batteries, but it increases the gas mileage, from 12 miles to the gallon to 35 miles to the gallon or whatever it is. So that is a savings for the buyer because gas prices are high and they're going to stay high for a while. It's also a little less of a risk for a lot of, I know a lot of car buyers right now they're kind of intrigued by electric vehicles, but they're not ready to take that leap where you have to install a charger in your house and do all those things. You can buy a PHEV, a plug-in hybrid, and you have the best of both worlds. So you have the ability to take this thing on a road trip if you need to, because you still have your gas engine, but you get better gas mileage. and that still consumes lithium. So if we see the demand for EVs or these plug-in hybrids begin to perk back up again, I think you're going to see the lithium price come up. And I think you're going to see these lithium companies, these developers catch a bid. And at that point, you know, you want to already own them so that you can profit off that move. But for the long term, yeah, the long term, I'm looking at brine companies. Companies that can produce lithium from oil field brines, I think, are the future.
Yeah, and I'm focused a lot on this DLE technology to see which one will actually work because there are a couple of pilot tests going on in North America. Let's see which one comes up. So I guess it's fair to say then, Matt, like you're not an overall bull here, but you do see an opportunity here and probably tied in with the expectations that demand is going to keep increasing for lithium and for EVs. Maybe not on a skyrocketing basis, but look, there are projections out there that demand is going to double in the next about 6 years. So overall, you would say that you're leaning slightly bullish, but very selective in terms of the companies.
Yeah, I would say that I am situationally bullish because I've seen the way these cycles work. And in commodity investing and natural resource investing, man, you can't be long all the time and you can't be short all the time because you're going to lose all of your money. Because if the prices go up and then they go down and they go up and they go down. And right now, it looks to me like we're at a cyclical bottom in lithium price. And I do expect the lithium price to pop higher, even if $10,000 a ton is going to be its long-term price, you're going to see it pop back up again purely out of sentiment. And right now, sentiment on EVs is low, and the lithium price has dragged it down, and the sentiment on China is low, and the Chinese economy. And it feels like if it's not full-blown capitulation, we're darn close. And so here, this is where I would say I'm a situational bull. I think we can pull a quick double, on a position in lithium producers or lithium developers. But yeah, I want to buy the blue chips in this at this time. I want oceanfront property because that's where you're going to make the most money.
Yeah, fair enough. And if when the market does come back for the stocks, those are the ones that also move first. Interesting comments there, Matt. Again, Matt Battiali, editor of the New Energy Investor, published under the Mangrove Investor website, which I will put in the show notes. Matt, always great chatting with you. We'll follow up on the lithium market in probably a couple of weeks, if not a month's time, to see what has changed and any companies that have maybe caught your eye. Thanks for your time today, Matt.
Thanks, Corey.